Welcome back to part 2 of the key metrics that you need to be focusing on in your trading. Now, apologies, it's taken a while. We've had a few issues with the microphone and potentially me being a little bit lazy this week when it comes to recording content. I'll be the first to admit that. But what you need to understand, firstly, with risk to reward is that this is not single-handedly the most important thing in your trading, but it's what's going to make the most difference. Why do I say that? Because risk to reward, as well as win rate, will increase and can increase exponentially as your skill level as a trader improves. So when you're a beginner, you might struggle to hit certain risk to reward levels on your trades or catch certain amounts of this is what we call your RR, risk to reward, and it's measured as a ratio. 1 being whatever you risk, 2, let's just call it X, which is whatever your reward is. Now this is variable and this is fixed. Obviously you can change how much you risk, but in terms of the ratio, this is always 1 R. If the entry between you, if this is your entry here, this is your stop loss here, this is 1 R. So if this is 10 pips, and every time price moves 10 pips in your direction, that's 1 R. So price moves 10 pips, that's 1 R. Price moves 20 pips, that's now 2 R, etc, 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 etc. So yeah, most important metric in your trading, most definitely, at least for someone that trades like myself. Why do I already explained why I say that, and as we go more into how I trade, that will become more and more apparent to you guys. So the first thing that I want to talk about risk to reward, because not a lot of people understand this about risk to reward, is that it's not something that's fixed. So a lot of time, I'm just going to go on here so people can see it a little bit easier. This is, let's measure out a 1 to 5. Let's keep the numbers nice and round. Oops, 95, 25, 1 to 5, nice and simple. So as you enter rather, and price starts to move in your direction. Now let's say price is halfway to your TP. Now at this point here, yes, this is a 1 to 5 trade, but it was a 1 to 5 trade when price was at your entry. Now that's crucial that you understand that, because the risk to reward is dynamic. Now your trade is now up 2.5 R. So if you risked, let's say, £100 on this setup, you'd now be up £250. Now, if price hits your stop loss, you would lose 100. If price hits your TP, you would make 500. Cool. What if price is now at a certain level of, let's just call it resistance? I know some people don't like using that word because they think that they're better than it or whatever. But when you really do understand how the markets move, you understand that whatever you want to call it is still support and resistance, because resistance is just an area where a large number of sell orders lie, and support is just an area where a large number of buy orders lie. So whether you want to call it a fair value gap or a supply zone or demand zone or whatever fancy terminology you want to give to it, essentially it's still just support and resistance, and the market moves off support and resistance. If you think it's liquidity or whatever, you're literally talking about the same thing. So get off your high horse and understand that there's more important things that matter than what you decide to, the names you attach, the labels you attach, should I say, to the lines and boxes that you draw on your chart. So risk to reward is firstly asymmetric, well, it should be asymmetric, because you should be risking, your wins should be making you more than you lose on your losers. If your losses are 100, 100, 100, and then your wins are 50, 50, you better have like a damn near 100% win rate to be making money, and that's pretty stupid. Your losses should be small and consistent. Not small as in the amount be small, but as a percentage be small. 1%, 1%, 1%, £100, £100, £100, and your wins should be variable, at least for the way I trade, and significantly larger. So maybe it's you risk £100 and then you make 500. Your next winning trade you make 800. Your next winning trade maybe you make 250, and then your next winning trade you might make 1,250. So it does vary. But back to my point about risk to reward being dynamic and how it changes, because now at this point here, price is now here. Price is now at a certain level of resistance. So if you choose to continue holding your trade, the risk to reward now, let's say you hold with your stop loss at break even, the risk to reward now of your trade is now 1-to-1. Now I hope this makes sense, because if price comes all the way back down, you've now lost 2.5R, 250. That's now what you're risking. Your risk from here back down to your entry is now 250, and you're set to make another 250 if it pushes up to here. So that's not to say that you close your trade in full at every time price hits resistance or support, or whichever way around it may be. That's not to say that you blindly hold. That's up to you. That's up to your strategy. I'm just pointing the fact out to you that risk to reward does change as price moves in your direction, and also as price moves against you. Now there's another way in which risk to reward is dynamic, and that's for those of you that are able to trail your stop losses. So I have a friend, and he's very, 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 very good at this. And I'm always telling him, like, bro, you can risk more on your trades because you never ever get stopped for 1R. Let me explain. Let's just make this all nice round numbers quickly. And we'll do the same example of, I don't know why it did that. We'll do the same example of a 1-to-5 setup. My bad. Same example, 1-to-5 setup. Now, if over the course of your backtesting, we're going to risk the same £100 on this setup. If over the course of your backtesting, you're still set to make 500 at TP. If over the course of your backtesting, you're consistently able to, as price moves in your direction, trail your stop loss from this original level of, this is 50 pips, consistently up to, say, you're only risking 30 pips. So as price moves in your direction, let's say price pushes up here, and then as price comes down and pushes up again, you're like, okay, cool, I'm going to trail my stops. Maybe you don't go stops to BE, but you trail your stops. And then eventually, imagine you do get stopped out, and you get stopped out here, but then price would have continued on to hit your original stop loss anyways. You've saved yourself now, instead of getting stopped for 100, you got stopped for 50, and consistently over the course of, say, 100 trades, your average loss, even though you're risking £100 initially when you enter the setup, your average loss over the course of 100 trades is only, say, 50. Now, your risk to reward now is no longer a 1-to-5, your average risk to reward. If your average win is 5R, it's not, because your average loss is 0.5. 0.5 to 5, this is, you're making the same 5R, sorry. It's now essentially a 1-to-10 setup. My bad. This here should be a 5. This is now essentially a 1-to-10 setup. So you've now essentially doubled your risk to reward. How? by consistently trailing your stop loss, cutting your losses early, reducing your average loss from 1R to 0.5R or 0.7R or 0.8R or whatever it might be. That does increase your average risk to reward. Now, at the same time, this is all to do with trade management, which arguably is one of the most important things that not a lot of people focus on, and not a lot of people spend enough time focused on, is trade management. It's very, 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 very important, and it's a lot easier to let your winners run than to enter a new setup with fresh risk on the table and find a new winning setup and then profit off of that, rather than just letting your winners run. And again, that's not to say you just blindly hold all your winners. No, of course, you have to bank profits at a certain point. But it's if a trade is going in your direction, then you ideally want to hold it for as long as it continues to go in your desired direction. Now, a lot of people also will trade with like fixed risk to reward. So they'll always target, say, 1 to 3 setups or 1 to 2 setups. Now, in my opinion, this is kind of stupid. Why? If this is your level that you're targeting, this is where you got in, this is where you're running your stops, and this is 2R, and this is your support level, why on earth would you close your trade here when you could extend up to here and you would have made 2.5, 3.5, 4R instead? Like I said, it's a lot easier to let your winners run rather than finding a new winning trade, because off the back of this, you would have doubled the amount of profit you made on your trade. That's a whole nother winning trade that you would have to go and find, when you could have just let this winner run up to your resistance or support level that you knew, based on your strategy, price is very likely to hit. I hope that makes sense. Now, this is not how I trade. That's why I said my wins are variable. Why? Because I always target structural areas in price where price can reverse from, and then that's where I will close my trades up or observe for a reaction, and then based off of said reaction, close my trade out. So more trades necessarily don't equal more profit. You just need better trades with better trade management to profit more. So risk to reward. Now, another thing that kind of messes up your risk to reward is taking partial profits too early and taking too much partial profits. Now, a lot of people, especially beginners and people with low win rates, are definitely susceptible to doing this. Why do I say that? If you're, say, for example, you have, say, a 20% win rate, but your average RR is 1 to 10, over the course of 10 trades, 100 trades, etc., you're going to be profitable, you're going to make money, because even though you only win 2 in every 10 trades, those 2 wins make you 20R, and your 8 losses will lose you 8R. So you're still up 12R over 10 trades. But if you've lost, say, 5 trades in a row, and now you've got a trade that's up 5R, you might be inclined to bag a good chunk of your trade to collect this, to recoup said losses. But then when your trade does go on to run and hit your 10R target, but you've closed out here, you've now kind of cut yourself off from the possibility of hitting said target and remaining profitable. So that's something to bear in mind, because when you do take, it's all just maths, when you do take partial profits at, say your trade is up 5R and you take 50% off the table, you've bagged 2.5R. Yeah, cool. If your trade now goes on to run on and hit 10R at final TP, you've only got 50% of your trade running. So you're only going to bag 5R at that final TP, which means your trade is now not a 10R trade. Although on the chart, on here, it looks cool. It looks cool to screenshot and show your friends on Instagram, yeah, man caught 10R, blah, 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 blah. But you only bagged 7.5. Now that's still an incredible trade. I'm not saying anything otherwise, but a lot of people bag too much too early, or they might bag it, instead of bagging at 5R, they bag at 3R, and they're bagging like 60% of their trade. Now, obviously, I can't tell anyone else how to trade or what works for their strategy. It's all very dependent on you, dependent on your back testing, depending on your data, depending on your strategy, depending on how you like to trade in order to keep your head straight for your next trade. But with that being said, it's important that, yeah, you have a strategy, yes, you have a plan, and that you stick to it. And if you don't, then you got to really question why don't I have a strategy? Why don't I have a plan? Why am I not sticking to it? Because those are the things in the long run that will get you. Those are the things that in the past used to get to me. So I'm speaking from experience. It's not like I'm just talking for the sake of talking. But anyways, hopefully this all made sense. And hopefully I will have part 3 out for you if there's no more microphone issues going forward. But with that being said, my private community, the Vault by Crypty Hustle, is open now. The link is in the description below. I look forward to seeing all of you there. Like, subscribe, share, comment, all of that good stuff. Share with a friend that needs to stop taking partial profits too early so that they can learn something from this. And hope you all have a very blessed weekend and an even more blessed trading week ahead. And I'll see you all soon.